Hello and welcome to MacroBusiness Radio Podcast. Today I'm joined by Leith Van Onselen to talk about the economy as we approach the end of the first half of 2025. Leith, very good morning to you. Thanks very much for your time as always. Within the last couple of weeks, but certainly within the last week, we've seen two state budgets following on from a federal budget in May and the Victorian budget. All have pointed to increasing questions about budget sustainability at almost all levels. Maybe West Australia is an exception there. On the one hand, we've got increasing budget commitments, social care, aged care, health and education for starters, and what looks like an increasing call on defence spending. You've previously referred to tax and spend governance, but what are you seeing at this stage insofar as just how sustainable what we've got is?
Look, Australia's finances and economy, I'd argue, are very unsustainable. So just this week, we saw credit rating agencies S&P note that the combined budget deficits of, this is Australian state and federal government, total 52 billion, and net debt now exceeds 60% of the country's GDP. Now, this equates to per capita deficit of nearly $2,000 and net debt of just over $45,000 per capita. So we are starting to talk some pretty serious numbers here, and S&P tipped that the combined net debt of the state and federal and territory governments are forecast to top 1.2 trillion during 2025-26. Now, that is obviously a lot of money, and it does sort of paint the picture that the budget finances aren't particularly sustainable. And independent economist Sol Eslake actually warned that a lot of this debt, and this is shown in the bottom right chart of this slide, which is by Justin Fabo from Antipody and Macro, that a lot of the debt currently is being driven by the state governments, and that actually has an implication for the federal government, because the federal government is basically the guarantor of state debt ultimately. That's the way it's perceived by the credit rating agencies. So if the state governments continue to have this growing debt, it means that the federal budget could potentially be downgraded. And then that could also have implications for Australia's banking system, because the banking system has an implied guarantee from the federal government. So the federal government is downgraded because of the state governments or because of its own actions. Borrowing costs could actually rise as well. So it could actually be seen in
on something that Deep T, when I chat with him, he regularly mentions. We'll see all sorts of commentary on the federal government or the Commonwealth budget, but it often is presented that the federal budget is reasonably okay, and it certainly looks reasonably okay compared with other sovereigns. But in Australia's case, as you say, we've got massive or relatively large state budgets and state public sectors and state decisions, which are all underpinned federally. Now, if we look at those state governments, we can see that much of the state government outlays are going on building or rebuilding infrastructure, and that's generally portrayed as sort of nation building, and it certainly is, but it is also often meeting demand baked in by past and current population growth. And the current population growth is baking in a need for ongoing infrastructure spending or an increasingly hostile outer suburban electorate in particular, or increasingly hostile country towns. So we are in a situation where the states actually need to keep spending, and the federal budget or the Commonwealth needs to be in a position to be able to underpin that if we're to try and continue that model. Is that how you see it?
Yeah, so the federal budget is facing growing calls to fund things like health, aged care spending, NDIS, that sort of thing. And this is happening alongside a time when the proportion of workers in the economy is going to shrink because of population aging, right? So, and at the same time, the federal government's also facing a squeeze on corporate taxes due to falling commodity prices, and also its indirect form of taxation. So we're talking things like fuel excise, tobacco excise, alcohol excise. Those are all shrinking as a share of revenue. So Fuel excise is shrinking, for example, because we're seeing the rise of electric vehicles, which don't pay fuel excise, don't pay road charges. That's siphoning off potential fuel excise revenue. Drivers are going towards hybrids, which are more fuel efficient, and just more fuel efficient cars in general. That's stripping billions of dollars of revenue from the federal budget. We've seen the fiasco with the tobacco excise, whereby we're now charging $2 excise per dart, and that's effectively given rise to a massive black market. So the federal government's actually losing billions of dollars in tobacco excise because people are just buying them illegally now, and they're not buying cigarettes through the traditional legal means. The backdrop of this is the federal budget revenues are structurally inhibited because they are overwhelmingly reliant on personal income taxes at a time when we've got an aging population and the share of workers in the economy is going to shrink. And then in all these other forms of taxation, which make up billions of dollars, shrinking as well. So it structurally, has a problem there. So one of the ways the federal government has tried to sort of fill the gap is by running a very high immigration program. And because the federal government collects 80% of the nation's tax revenue, so we're talking, personal income taxes, corporate taxes, predominantly. It loves running big migration because if you import hundreds of thousands of extra migrants in the country every year, most of them work. They'll pay personal income taxes. You also get rising corporate taxes because it lifts aggregate spending in the economy. So think about migrants that go to Harvey Norman to buy furniture, etc. And as a result, the federal government gets to clip the ticket on that, and they get all the upside benefit from high migration. But as you just mentioned with the states, the problem with it is the states are left carrying the can, trying to fund the infrastructure, the services, all those sorts of things for those growing populations. And as a result, the states are drowning in debt. Probably the only state which isn't really affected is Western Australia, although it has very strong population growth. It obviously has incredibly strong resource royalties, mining royalties, that sort of thing. And it's got a bit of a sweetheart deal on the GST. So, but by and large, the states are left drowning in debt, trying to fund this infrastructure to keep up with the big Australia immigration, which the federal government's, trying to run to solve its own budget problem. And in the end, what it tells you is that the whole budget makeup in this country is unsustainable the way it's set up. And what we really need is we need the federal government to dust off the old Henry tax review from 2010, which had pretty much set the framework about what to do in a lot of ways. And the federal government needs to do a broad-based tax reform. It needs to shift the burden away from workers, because at the moment, the percentage of tax raised from workers has never been higher. It's insane. It's unsustainable. It's unfair. It needs to shift it onto things like resources, consumption, wealth, that kind of thing. And so I'm personally all in favour of raising the GST. Provided you give some compensation to people on fixed incomes and that sort of thing. We also need to start taxing our commodity exports properly, because we don't do that. We don't tax commodities nearly strongly enough, like other countries do, like Qatar and Norway and those sorts of places. And that could raise billions of dollars of tax revenue and make us all better off.
Could I just raise a couple of points there? The first one is people of any society, but in our case Australia, they tend to think first of themselves. With this particular issue about budget sustainability, it's now becoming a problem or an issue across the developed world. And if you look at the United Kingdom, what is a reasonably new Labor government there of Keir Starmer is having immense problems trying to rein in some social outlays. They've already talked about what you're talking about now, about immigration and population growth, but they're facing a similar dynamic without the states intervening in the case of the UK, and they've got immense problems. They've also got another impost on taxpayers there, which I suspect Australia is soon to be looking at as well, and that is increased defence spending. So, it really is up to us, or of this generation, or probably this government, if you think that it's probably baked in for a couple of terms, to start doing something meaningful about productivity. In Australia's case, as you point out, as you and David at MacroBusiness have pointed out for a very long time, we are a houses and holes economy, and we are anti-competitive almost. We do have the world's most expensive people, land, offices, energy, and internet. So when we're talking about productivity, it's not just a matter of getting someone else to pay. And I think most ordinary everyday Australians on the street would rightly ask questions about who is paying, but it's about actually having policy to generate sectors of the economy which can earn Australia a dollar apart from the resources and the agriculture. Would you see it in that sense?
Yeah, yeah. Unfortunately, Australia's industrial base just keeps getting thinner and thinner. We unfortunately, I've said this over and over again, but Australia's manufacturing sector is the smallest in the OECD. It's actually shrunk. It keeps shrinking because of high energy costs, and there's a whole host of reasons why our manufacturing industry has shrunk. We obviously eliminated tariffs. We had a mining boom which pushed up the Australian dollar and made us less competitive. But more recently, we've also given ourselves expensive energy, and that's sent a whole bunch of industry overseas. But the upshot
Yeah.
of it is we've basically been left with a narrowed down economy that is effectively houses and holes, right? So it's commodity based. So that's where the lion's share of our exports come from. Almost all of them come from
Yep.
commodities and agriculture. And then we're left with this services economy, which is built on government borrowing, government debt, household debt, blowing up house prices, that sort of thing. It's very non-productive, and it doesn't provide you with the
And
whole.
for most people in that economy, it's not something they directly contribute to any national income through their efforts. Most people that you bump into down at the supermarket, they'll be working in that services economy, which is basically a tax and spend economy, as you pointed out.
Yeah, 100%. And but this does, given that we are so reliant on our resources, we should be taxing those things, properly. So I always say the counterfactual is the perfect counterfactual is Norway. My view is Australia should be the richest country in the world, right? Because we have pretty much everything the world needs, other than oil. So this this chart on the left hand side basically shows country reserves of all the materials that are used in batteries, right? So we've got lithium, cobalt, manganese, nickel, copper, all sorts of stuff. Australia's at the top of that. We have the world's highest resources of everything that goes into a battery, right? So if we're going to go towards an electrified world whereby batteries are going to power everything, etc., which is the plan, well, Australians should be milking it in, right? We're also the biggest iron ore exporter. We're the biggest coal exporter in the world, and we're the second biggest gas exporter in the world. And as the chart in the middle at the top there shows, Australia has benefited the most from rising commodity prices. So
Yeah.
what that chart shows is it shows the terms of trade across countries. What terms of trade is basically the price you receive for your exports versus the price you pay for your imports. It's a ratio, and we've had the biggest, effectively, national pay rise in the world, right? So you think with that we should be swimming in budget money, but unfortunately we just don't tax this stuff properly. And as the charts on the right show, this is just looking at oil and gas taxation. Australia's at the top, Norway's at the bottom on the right hand side. Australia's had a massive gas boom whereby billions of dollars in revenue on gas exports has been earned, but as the orange bars show, the federal government's collected hardly anything from it. Whereas the
Yeah.
Norway, which is at the bottom, taxes their oil and gas exports at about 80%. So Norway is a major oil and gas exporter like Australia, not as big as us, but because it's a tiny country, it's only 5.5 million people, about roughly the size of Melbourne. But because it's taxed it properly, it's swimming in money. And as the bottom middle chart shows, Norway has invested that money in a sovereign wealth fund, which is basically it's like a future fund, but it only invests overseas, and it's basically rehypothecated all its tax revenue from its oil and gas exports invested overseas. It's the biggest investor in companies like Microsoft, etc. And this fund is so big now; it's now worth over $300,000 US per Norwegian. So Norway are just sitting on this massive endowment of money. They're incredibly rich off their resources. And then you look at Australia and you say, well, what are we doing? Australia does the opposite. So instead of taxing our resources properly, Australia does dumb things like we grow our population aggressively. So Norway's population has grown by about 25% since 1960. Ours has grown by about 170%. since 1960. So what we're doing is we don't tax it properly, and then we grow the population aggressively, which then dilutes your mineral base amongst more people,
Yeah.
and it just makes you ultimately poorer per capita. And so we do everything back to front here, and the fact of the matter is the federal government could solve the budget problem pretty easily if it just brought in a proper resources taxation regime. Because as these charts show, and there's I could have put iron or coal and gas up here as well. But as the chart on the left shows, Australia is swimming in resources. So we should be
If we
incredibly
think we're
rich.
starting from an Australian polity, which is probably psychologically scarred by the events which happened to Kevin Rudd, I don't know, 14, 15 years ago now, my thinking as I look at that chart is future Australians will look at that and say, what the hell happened with the resources boom that we know Australia had? Why isn't it here? And at the same time, I find myself thinking, okay, we've essentially missed out on that. But we need to build something now. As you say, the current budget is unsustainable, both at a Commonwealth and a number of states level. So we need to start developing an economy which has an external facing side. My thinking, and this goes back to the early 1980s when I was at university and doing economics, they were always talking about further downstream processing of what Australia exports as raw. So I would think if the Australia of the future is to benefit from what we're doing now, we really do need to start thinking about, okay, how do we get that further downstream processing? Does it take the form of things like that is sometimes talked about with the federal government investing in Whyalla in South Australia? Is it a case of getting the CSIRO to say, okay, what new technologies have you got in the pipeline that we can deploy? But before we can get to any of those questions, as you and Dave have regularly pointed out, we need to do something about Australia's energy costs, about its infrastructure, and the whole way that people approach the subject of productivity, insofar as most people probably don't care as long as their house prices go up. Is
Yeah,
that how you
and
see it?
yeah, absolutely. But I mean, as you said, this is all predicated on having abundant and affordable energy. If we don't have abundant and affordable energy, we can't have manufacturing. So what you're effectively talking about is value adding, right? So instead of
Yeah,
just digging up dirt and selling it and sending it to China or Japan so they can process it into things like cars or whatever it is,
yeah.
things that actually are worth a lot of money. Australia should do some of it itself. Now, we're obviously not going to go and make, high tech computers and stuff, but we could certainly, do the processing of iron ore into steel, right? Instead of
Well,
just
as
selling
you
it.
say from your charts there, Australia, we already know that China has a 90% stranglehold on minerals and rare earths or rare minerals or whatever you want to call them required for the green future, the green technology. Australia already has a lot of those, so we should be actually positioning ourselves to do something with them other than put them on a boat and get someone else to process them. Is that the sort of stuff you'd be looking at?
Yeah, 100%. But again, that's predicated on having cheap and abundant energy, and we don't have
Yeah,
cheap and abundant energy, which means that's never possible. We're never going to be competitive if the cost of running a blast furnace or whatever it is, which you need to convert iron ore into steel, costs orders of magnitude more than it should because gas is incredible because we've made gas incredibly expensive despite the fact that we're the second biggest gas exporter in the world. Um,
yeah,
so
100% right.
so
It
that's the
defies
conundrum.
credulity that Australia has the gas positioning that it has. It's simply incredible.
Yeah, well, it's not
One
just
of
gas. It's
those,
it's also we export about 7 times more coal than we use domestically. Yet we're
yeah,
trying to blow up our coal plants under net zero when we sell the same coal to India and China, which burn coal with impunity. And same
yeah,
with gas. So Australia has this delusion that we should get off fossil fuels for electricity generation, um, and become renewable and this sort of stuff. At the same time as we sell those same fossil fuels that we're trying to get ourselves off, we sell orders of magnitude more to Asia
to China and India.
to burn instead of us, and then that's just making China more competitive, and then they, and so then we end up the whole thing's back to front, and
100%. If you take the view that Australia contributes about 1% of global greenhouse gas emissions, if we were to achieve let's say a 30% reduction in emissions, we would change that 1% to 0.7 of 1%, whereas the exports are fueling the Chinas, the Indias, and other emerging nations. They're going up by orders of magnitude, by 5s and 10%. It's a simply crazy positioning. At that point, before we go into the coal and the gas, one of the factors which has risen to the surface in the last week has been differing approaches to addressing housing needs here in Australia. If we think to ourselves, all of those Australians who are living there and working here need a roof over their heads, and we haven't done very well at making sure that we have enough roofs to go over enough heads. We've seen Queensland and New South Wales come out with differing approaches in their budgets about how they're going to even try and get housing construction stimulated. What are you seeing there?
Yeah, but before I get on that, I'll just give a quick overview of where the Australian housing market's at. So this chart here is from CoreLogic, or they now call themselves Cotality, but what it shows is it's taken as of the 31st of December 2024. So it's obviously 6 months old now, and things have changed a little bit. But what it shows is that Australian housing was basically its most unaffordable level ever to buy or rent. So the house price to income ratio was about 8 times at the end of 2024, which is equal record high. Percentage of income required to service a new mortgage was highest ever at just over 50% nationally. Years to save a deposit was nearly 11 years, which is equal highest on record. And then also the percentage income required to pay rent was also at its highest level ever. So pretty much if you want to buy a home or you want to rent a home, you are looking at the worst situation in recorded history at the end of 2024. Now, that's obviously improved a little bit with two rate cuts. So we've had 2 rate cuts so far this year, but and that's obviously reduced mortgage repayments a bit, so mortgage affordability would have improved a little bit, and the financial markets are tipping 3 more rate cuts this year. And every time that we've had rate cuts, and this is what the chart on the right shows, and that was put together by the Australian Financial Review. Every time we've had rate cuts, we've had rising house prices 2 years later. So usually it's about double digits that you get house price rises 2 years after the commencement of an interest rate cutting cycle. So if that holds this time around, obviously house prices are going to go up, which will make housing less affordable. Although that'll be offset by obviously lower mortgage rates. So there's a bit of give and take, but structurally they'll become less affordable.
Can I just chime in there for a second?
Yep.
Most people assume, okay, falling interest rates gives people more money to spend. But what actually happens in Australian society is that people who are often desperate for housing or desperate to get into a mortgage just see it as an opportunity to borrow more. And that's what drives the house prices up.
Yeah, and that's shown in this the bottom right hand chart here on average loan size and dwelling prices. You can see that. So that was done by Alex Jordan and I from research. It goes back all the way back to the late 90s or early 90s. Average loan sizes and dwelling prices have just followed each other up for 25 years. And if you think
that's a very high level of correlation right there, isn't it?
Mate, it is. And if you think about the last 25 years, what have we seen? We've seen first home buyer grants, we've seen shared equity schemes, we've seen all sorts of policies by state and federal government to just pump up house prices, right? To so-called affordability measures that they argue were about affordability, but really they're just adding extra demand to the housing market. And
well, it's increasing people's borrowing capacity.
That's it,
as much as anything.
So as a result, so as a result, these sorts of demand side policies, all they end up doing is just getting capitalised into higher house prices. And same with lower interest rates; it just does the same thing. So it doesn't make lower interest rates doesn't make your market structurally more affordable. It just makes it cheaper to take out a mortgage at a given size, right? So, but
or a life-deforming mortgage if you're an Australian.
That's right, absolutely. So if you look at the recent election campaign, we saw some stupid policies come in that are just going to add to demand. So I'll just get on with this first before I go into the state
Yep.
stuff. So we saw Labor obviously won the election. They implemented a 5% deposit scheme for first home buyers. So effectively, it's uncapped on the number of places uh, and uncapped on income levels, etc., and very generous caps on the price of the home you're allowed to buy. So effectively, almost all first home buyers from January 1 next year are going to be able to purchase a home with a 5% deposit without paying lenders mortgage insurance because taxpayers are going to guarantee 15% of the mortgage. That's going to obviously put more upward pressure on house prices because it's going to increase the amount of buyers in the market. How much those buyers will be willing to, some of them will be willing to borrow more than they would have otherwise because they don't have to come up with a deposit, as big a deposit. Just more upward pressure on house prices. The Albanese government also ordered the lenders to exclude student debts from loan serviceability calculations. That just increases the capacity to pay. And the table there in the bottom left, which was done by Compare the Market, shows that the borrowing power boost. So if you're on $100,000 and you have student debt, if you can waive that student debt on your loan serviceability calculations, you can borrow another
You can
56,000.
borrow lots more.
So yeah, and
But it
then
doesn't mean they don't need to pay back the student debt.
no, that's right. But it just increases capacity to pay, right? And that's ultimately going to get capitalised into higher home prices, as the chart on the right from
Yeah.
Alex Joyner shows. And then Labor also expanded its shared equity scheme, like offered more places, a bit more generous, etc. We've also seen, in true Australian form, Australian lenders have come to the party as well, and they're now offering, more generous products so you can borrow more, so you can get into more debt and pay more for housing, pay higher prices. So we're seeing, the rollout of 40-year mortgage terms. They're not widespread yet, but there are products out there now that are doing 40 years. So, years ago it used to be 15 years, and then it became 25, 30, now it's 40. I'm sure by the time, I'm on my, I'm a grandparent, it'll probably have 50-year mortgages, and then maybe it might be, whole of life mortgage.
Intergenerational
Yeah,
mortgage.
that's right. And then, AMP also brought out a month or so ago a 10-year interest-only mortgage. So you can basically, for owner-occupiers, investors, first-home buyers, everyone, and basically
Yeah.
that'll let people take out a 10-year interest-only mortgage without any assessment in between. So you don't have to, do any mid-term assessments. Again, just another way for people to borrow more money, pay more for housing, push prices up. So ultimately, these policies are just going to lead to higher prices. Now, this takes us to the New South Wales and Queensland budget,
Yep.
which this year to me kind of signalled that they're losing the war on housing affordability. So New South Wales took a very different approach to Queensland. New South Wales acknowledged that property developers are facing troubles gaining finance for new projects because often when if you're a developer and you want to do a project and you go to get financing, they ask for your pre-sales. And if you don't have enough pre-sales, they won't give you finance. So the New South Wales government has basically promised to be the buyer of last resort, and they promised that any stock up to $50 million per development, the New South Wales government will purchase, and that's a way of appeasing the lenders to say, look, the government's going to guarantee that they're going to buy $50 million worth of these apartments if we can't sell them. So therefore, you can give me money to build these homes. So
But it's also a guarantee that the taxpayer, who's got a lot of other clips on their tab, is going to be the guarantor if anything goes wrong with those
oh,
projects.
absolutely, and not just that, it's also very likely to, well, you'd assume that generally speaking, the apartment complexes that won't be sold are the ones that are poorer quality, right? So if a
Yeah.
developer puts up a pretty crappy development and buyers are less likely to buy that, so it's full of shoe boxes and they're overpriced, well then the taxpayer could be held carrying the can on poorer quality developments because they're the ones that couldn't sell. But
And presumably the taxpayer will be clipped for any situation like one of those developments in Sydney where there's ginormous cracks in
yeah,
walls.
Opal and Mascot, etc. So, but New South Wales Treasurer Daniel Mookhey, he in his budget speech said that this policy will bring forward the construction of 15,000 extra homes. So yeah, he thinks it'll boost supply a bit. The problem with it is 15,000 sounds like it's good, right? The problem
Yeah,
is
drop
the
the
National
nation.
Housing Supply and Affordability Council in their latest State of the Housing Market report projected over the next 5 years. So Daniel Wilkie said 15,000 over 5 years. It projected that New South Wales will fall short of its agreed target by 130,000. So
Yeah.
again, it's not enough, and it's worth pointing out that the reason. So this policy, if it delivered an extra 15,000 over 5 years, would deliver 12% of what the National Housing Supply and Affordability Council said that New South Wales would be short. And it's also worth pointing out that that the reason why New South Wales is short on housing is pretty obvious. It's because of its extremely high immigration. So just last year, New South Wales had just over 100,000 net overseas migrants, landing New South Wales, and it was 108,000. And guess what? About 99% of that, so 107,000 of that, was from net overseas migration. So virtually all of New South Wales' population growth last year was net overseas migration. In the decade to December 2024, so the decade of 2024, the most recent data, New South Wales population grew by just under 1 million, so 983,000. Net overseas migration accounted for 88% of that, right? So the fact of the matter is the fundamental driver of New South Wales's housing affordability shortage or housing affordability problem is actually excessive net overseas migration. And so what that tells you is, instead of these sort of gimmick policies that the government has brought in, a more sensible solution would be for the New South Wales government to lobby publicly, tell the federal government, you got to slow immigration. And I guarantee you, like, they are the biggest government in the country, the biggest state government in the country. If they kicked up a stink about this, we probably would get migration cuts. And that's really what they should be doing. They should be saying to the federal government, look, we can't absorb this many migrants. We can't absorb over 100,000 migrants every year, which you keep pumping into our state. So you need to cut that. Supply can never keep up with demand. Alternatively, you need to give us $50,000 per migrant that lands in our state to pay for our infrastructure, to pay for our extra housing and services that we need, social housing, that sort of stuff. Because at the moment we are drowning in debt, trying to build infrastructure to keep up with this population explosion, which we can never keep up with. It's drowning us in debt. It's causing this chronic housing crisis. It's forcing, native New South Welshmen to leave the state because it's unaffordable, which is not good.
Some of them are even turning up here in Victoria, mate.
That's right. Guarantee it. That's right. So anyway, that's the New South Wales side. Now the Queensland side's way more egregious, because at least New South Wales is giving it a crack. At least they're trying to boost supply, even if it's futile.
They're flying the flag, but I read what you're talking about as essentially, to some extent, throwing in the towel. They're saying there's a limit to what they can do. Yeah. With your point about New South Wales should draw a line in the sand, I would have thought New South Wales and Victoria should, and I assume Brisbane, Queensland would join in with it, is simply say, hang on, every point you've just made is 100% correct. It's just beyond the scope of the economy we have to build that number of houses.
Absolutely.
And at that point, if they were to go to the Commonwealth government and say, okay, we want a nominal sum per migrant moving to Sydney or Melbourne or Brisbane, then you would almost force the issue there. But I don't have any sense that that's likely to happen. So I actually wonder, we are baking in housing poverty for Australians for a long time to come.
Oh, absolutely we are. So, but the Queensland government has brought in an even more egregious policy, because at least, as I said, at least New South Wales is trying, but, well, sort of trying, at least trying to bit. Yeah. The Queensland government's just gone the other way, right? So the Queensland government, so this is in the context of Brisbane house prices increasing about 85% since the start of the pandemic in March 2020. So, we're talking massive growth here. Now, Queensland's has now become the second most unaffordable housing market in the country, behind Sydney. So, 5 years ago, Queensland was relatively affordable, and people in Melbourne would go, gee, let's go up to Queensland. It's way cheaper. We can sell a house and get a much better one in Queensland, have hundreds of thousands of dollars left over. Well, now Queensland's more expensive than Melbourne. And so, the Queensland state budget this week announced the most generous shared equity scheme in the nation. So what their promise is to, for homes up to $1 million, The Queensland government will provide 30% equity for new builds and 25% for existing housing. So it's very, very generous. And it's available for singles earning up to 150,000, and for households with children earning up to 225,000. So this is just another one of these demand side policies, a bit like the federal government's 5% deposit scheme and their own shared equity scheme. It's just going to be self defeating. It's going to push up home prices, and it's going to make Queensland housing more structurally unaffordable than it already was. And again, it's just another one of these stupid demand pumping policies that ultimately does not solve the problem. And in fact, in the case of Queensland, makes the problem even worse. And
I would have thought across the board it's making the problem worse, because the people we want to help us build the extra houses are probably working building infrastructure.
yep.
And we've got state governments building the infrastructure to pay for the immigration that we've already got. So if we don't have those same guys building infrastructure and we have them building houses, the logical market response is for the infrastructure builders to bid up prices for that labour. So we've got a sort of wage spiral starts to unfold. And that comes back to Australia's productivity as a national economy. It's structurally unproductive, uncompetitive, as you guys have pointed out for a very long period of time. It requires a reasonably cold and data-backed analysis of every factor, which people like you and I might hope would happen at a productivity roundtable, but which I suspect probably won't happen. But there is a need for, just coherent economic policy across the board, which we just aren't seeing.
Yeah, absolutely. And unfortunately, I don't think the Australia's productivity is going to turn around. And
While you're throwing that up, I
there
was
we go.
just thinking about the Queensland economy. Certainly, house prices in Brisbane have rocketed, but Queensland is probably Australia's most demographically dispersed economy, and some of the towns up the Queensland coast are a fair bit cheaper than Brisbane, although that diversified demographic structure of Queensland, that would to some extent be influenced by the Gladstone LNG terminal, which, fine, it is an external facing piece of infrastructure. But in Australia's case, we really do need to do something about returning gas to Australians in the domestic market, which would imply potentially lesser use of the Gladstone money factory as it is for presumably Australia's gas exporters.
Yeah, absolutely. I mean, it's completely bonkers that we charge Australians, you know, global prices effectively for their gas when we literally sell just under 3/4 of East Coast gas we export, and most of that goes to China. So it just makes no
There'll be
sense.
very large investors in places like Abu Dhabi who will be hoping the Australian government continues to do that. However,
Yeah, absolutely, and unfortunately, our clown show government doesn't really show much, much willingness to do the right thing by its citizens, which is one of the reasons
yeah,
why we're in this predicament of, you know, declining economy with declining manufacturing base, structurally high energy prices, and an economy that's becoming less diversified by the day. And just on the productivity stuff, I've
yeah,
put some slides up on productivity, and the middle the middle chart at the top there, which is from Justin Farber and Macro, shows that Australia's productivity growth has been the worst in the advanced world since since about 2018, and
yeah,
a lot of this is driven by recently has been driven by the explosion in the non-market sector. So the chart on the top left there plots productivity growth in the market sector versus non-market sector. What the market sector is basically the private sector economy. The
yeah,
non-market sector is the economy that's heavily influenced by government spending, government funding. So, for example, if you own a NDIS outfit, you might be a private operator because you're not government owned, but if your funding effectively comes from NDIS funding, you're effectively non-market, right?
yeah,
So, unfortunately, 80% of Australia's job growth since in the last 2 years has been in the non-market sector. 60% of Australia's job growth since the start of the pandemic has been in the non-market sector. And this explosion in these, mostly NDIS type jobs has contributed to Australia's poor productivity, but it's not the only factor. The chart on the right-hand side, which comes from Jared Minack, shows the long-run problem that Australia faces with productivity. So effectively, historically, the largest driver since the Second World War has been what's called capital deepening. So what that is when you have an increase in the capital labour ratio. So if you think about it, providing your workers with more technology, more capital equipment, more tools, etc., machinery to work with makes them more productive. But what Australia and the growth in that capital to labour ratio, so the amount of tools and everything they have per person, per worker, is the biggest driver of productivity, or has been historically in Australia. Unfortunately, the last 20 years, or especially the last decade, with Australia's Big Australia policy, we haven't had the business investment or the infrastructure investment to keep up with that. And as a result, the capital labour ratio has fallen dramatically. And that's what that chart shows. In fact, it's fallen pretty much to zero now. And what that means is that we are now experiencing capital shallowing. So workers have less tools, machinery, technology, etc., to work with, which has made us less productive as an economy. Now, I've used this example before. If you run a cafe and you've got 2 baristas operating one coffee machine, they can turn out 100 coffees an hour. If you double the number of baristas to 4, but you don't increase the number of coffee machines to work with it, you're not going to double your output. You're going to get less output per worker because they're going to be congested, they're going to have to bump into each other, etc. That's effectively what's happened to the Australian economy. We've pumped in 8.7 million people this century so far, not even 25 years. And we haven't provided the infrastructure for those people. We haven't provided the business investment, etc. And as a result, we've become less productive as an economy. And that's kind of shown in the middle bottom chart there, which compares per capita GDP, labour productivity, immigration. As the immigration rate went up, real per capita GDP has fallen, as has productivity growth. Now, obviously, correlation doesn't equal causation, but when you couple that with the chart on the top right from Jared Minack, I think it's pretty compelling.
I certainly think it's incredibly compelling. The way I tend to see what you're talking about is Australia's got out of having a manufacturing sector, which is either import competing or exporting. Yep. So the departure of the car making is a good example. But in all manufacturing sectors, you've got investors who invest in plant, and labour is a variable. And, as you're saying, you get more labour in, you can make more widgets or more of whatever it is you're making at usually cheaper prices. Australia's to some extent been blown out of the water by the rise of big manufacturing nations like China. But what we've gone into is the services of the self economy, the baristas, the fitness trainers, the whatever it is, which productivity is rarely a price setter for people in those business. It's location. Like, it's not as though coffee shops change their prices according to how many other coffee shops are about. It's just they either sell more or less coffee because that's the number of people who walk past the shop each day.
Yeah, and it's also harder to boost productivity in services industries because for example, my wife's a podiatrist, right? So she does 20-minute appointments, and she can't really increase it to 15 minutes appointments. Sure, she'd churn through more people, but she wouldn't be able to give them the quality of care. So it's very hard to increase throughput in services jobs in the same way as you can in manufacturing, whereby you can automate, you can you can use technology and things like that. So as the Australian economy has absolutely destroyed its manufacturing sector, it's the lowest share in the OECD by a mile. It's meant that we're more services dependent, and then we've also become more government services dependent, through the NDIS, etc., which has done this explosion in the non-market sector jobs. So that's part of the reason why Australia's productivity stinks. It dates back to really back in the 1980s when we broke down the tariff walls, that obviously hurt manufacturing. We then got Dutch disease when we had the big commodity price boom and Australian dollar went over dollar US. That made us less competitive, which also hurt manufacturing. Then we've
And we've
had,
shot manufacturers in the back of the head
mate,
with our energy
multiple
policy as well.
multiple times, and then obviously energy
Yeah,
prices has been the biggest factor recently. Recently I'm talking the sort of the last decade,
yeah.
yeah, especially the last 5 years. But so we've it's been a rolling bunch of hits to the manufacturing sector, and right now the biggest impact is the high energy costs, and we've seen this in the last couple of years. We saw uh, Queenos, which was Australia's last plastic manufacturer, that shut down last year, citing high energy costs. Just couldn't afford to compete anymore. It's just too expensive. We lost our last architectural glass maker, the Oceanic Glass, which actually put all the glass in the Australian Parliament House, the new Parliament House. They shut down earlier this year because of high energy costs. Because you can't run blast furnaces
Yeah.
using gas when your gas is incredibly expensive. This is unviable. So they shut down. We saw Incitec Pivot, which is a major fertilizer company, has Incitec Pivot has downsized and shut down several facilities, and they're on the way out. Orica, which is a mining explosives manufacturer and fertilizer, they've also threatened to downsize and shift down to the
At
US.
that point, Leith, I've got an idea insofar as we're 6 months away from our current federal government needing to make a decision about whether to continue or cease the energy rebate. I would have thought there would be some merit in having some form of energy rebate for manufacturers, although that might bump into industry protection laws which apply internationally.
Yeah, and ultimately it's a band-aid. I mean,
Yeah,
ultimately the way to solve this is to do good energy policy, right? So that you should have domestic gas reservation on the East Coast to bring down gas prices directly. That'll help bring down wholesale electricity prices as well, because gas is one of the marginal price setters in the wholesale electricity market. And also, as I keep saying, I think we should get off this net zero bandwagon. So China's increased their coal use by 50% in the last decade.
and we're providing most of that coal.
Yes, yeah. Well, actually, most of it comes from China. So China's the biggest producer, biggest importer, and biggest user. So they're actually the biggest producer of their own coal, and then
Yeah.
they supplement it with our coal. But regardless, they've increased their coal use by about 50% last decade. India's increased theirs by about 70%. China burns about 30% more coal than the rest of the world combined. That's the chart on the left, the second one down. You can see
Yeah.
the CO2 emissions in the top left chart there from our world in data. China just blows it off the chart, right? Australia's a little rounding error at the bottom. You can barely see it at the bottom of the axis. India's growing fast. China's growing fast. Those two are growing, driving the world's rising carbon emissions. Certainly not Australia.
That's exactly the point I was making before. When Australia, with about 1% of the world's emissions, if we meet the target, if we reduce our emissions by 30%,
Or to zero even, mate.
which I don't think anyone's actually thinking to achieve anything near that, we get Australia's contribution from 1% to 0.7%, while China and India, and it's not just a matter of China and India, it's the
Yeah, it's other
emerging
countries.
world.
Yeah.
But if they're going to blow their emissions so completely out of the water, often using our coal or our gas, then what is the actual marginal utility of us meeting our target?
Yeah, that's right. So look, nearly 2/3 of the rise in carbon emissions since 2000 has been from China alone. And
Yeah,
China has, in the top right hand, this comes from Statista. According to Statista, China and India have about 1,500 coal-fired generators versus
yeah,
Australia's 18. So the the point here is, as this chart, the top middle chart here shows, Australia's committing energy suicide. So we export literally 7 times more gas. I think it's about 7 times more gas. The chart's pretty clear. The
yeah.
grey area there is what we export. The yellow is what we use. We export so much more coal. I think I should say gas. I meant coal. Coal than we use domestically. That it makes no sense to go and say, look, we're going to force ourselves off coal for intermittent and unreliable renewables, which cost a hell of a lot of money to build out, etc. when we're selling literally 7 times as much of that stuff to India and China and Japan.
And to
Japan
get
gets it as
that
well. But
mild downturn in the yellow bar you've got there in that same chart you're talking about,
yeah,
we've basically killed our manufacturers.
yes, which is the
And
chart on
at
the
an
left.
underlying level, we've still got a domestic urban electricity system, which is heavily dependent on coal and gas.
Yes, that's right. And so, the chart on the left is the Australia's manufacturing share. It's just been decimated, as I said, about 5% now. We export 7 times more coal than we use. We export about 4 times more gas nationally. So that's East Coast, West Coast, than we use. And um, on the East Coast, we export nearly, just over 70% of our gas. And we've actually increased the production of that gas. That's the chart on the top right there. We've increased our production of gas. We've doubled it in the last decade when the LNG export terminals in Gladstone open up. We've actually supplied the domestic market with 25% less gas. So what are we doing here? And all that's done is it's driven up East Coast gas prices, basically tripled them. And what that's done is that's then that's driven up electricity prices because gas is one of the key inputs into the wholesale electricity market. So you got to ask yourself, what are we doing here? Like, wouldn't it make
Well,
more
we're
sense?
driving people into the non-market economy, so they're all becoming either actual or quasi-public servants. But at the same time, we aren't doing anything to make ourselves productive,
No.
and we're not driving people into high-paying government-funded jobs. We're driving them into generally low-paying, low-skilled government jobs. And at that point, can I just bring us back to the consumer? The data out this week tells us consumers are still doing it pretty tough. Um, we are sort of expecting the RBA to cut rates through the back half of this year. But would you be expecting any meaningful uptick in consumer sentiment?
Look, I think if the RBA delivers 3 more rate cuts, which is predicted by the end of the year, I think we certainly will get a rebound. But it's not going to change the fact that Australia's per capita economy is pretty structurally sick. I wish I put a chart in this chart pack, but we've had declining per capita GDP growth for 9 out of the last 12 quarters. Household consumption has been falling for 8 consecutive quarters in annual terms. So that's per capita household consumption. So the household sector is very sick. The private sector economy is very sick. Almost, the lion's share, as I said before, lion's share of the jobs has come from the non-market sector.
Which has me wondering whether we get an uptick in sentiment through the back half of this year, but that gets sapped at the end of the year when the government says, oh, we don't need the energy rebate anymore.
Yeah, that's right. So if once the energy rebates roll off, if they're not replaced, we don't have any movement on energy policy. Well, then that's just going to be another drain of consumers. And if we get an oil price spike as well with all the stuff going on overseas, that's going to also drain household disposable income. So yeah, I'd expect 3 interest rate cuts would give you some of a bounce, but it's going to be very muted.
Yeah.
And these charts here just get back to what I was saying. The red bars on the left chart, which comes from CBA, shows the explosion in non-market jobs versus the market sector. So you can see in the last 2 years, 80% of the jobs have come from the non-market sector, and 60% since the pandemic started come from the non-market sector. And in fact, since the GFC, the global financial crisis, 2008, non-market jobs have grown by 82% versus only 20% in the market sector. So, Australia's whole economy really for longer than since the pandemic has been more and more reliant on effectively government spending or these government type services jobs. It's not a particularly sustainable situation. And it gets back to my point before. If Australia just keeps maintaining the same big Australia policy of, growing the population aggressively through immigration, the official forecasts are to grow by 13.5 million people in the next 40 years, according to the Centre for Population. If we keep doing that and we don't increase infrastructure to boot, we don't increase, business investment, we're just going to have this slow grind out economy that is just going to have very low productivity growth, very low per capita GDP growth, and we're just going to stagnate. And 13.5 million people in 40 years, to put that into perspective, It took Australia about 170 years to get to 13.5 million people
13
in the
million. Yeah.
mid 1970s, right? So, we're supposed to add a Sydney, a Brisbane, and a Melbourne worth of people. So if you think of everyone in Sydney, Melbourne, and Brisbane right now, we're supposed to cut and paste that and add that in the next 40 years to the Australian population. So to do that, you need all of the businesses investment, stock of investment or whatever it is, infrastructure, housing. They're in those three cities. You need to replicate that in 40 years, and obviously, it's not going to happen. Which means we're going to get this
As
capital shallowing.
disturbing as it might sound, I can recall Australia with a population of 14 million. I was at school then.
Yeah,
But the question I would come back to is more than anything else, to grow the population, you need an economic rationale. And the only rationale we have at the moment is the rationale of growth for growth's sake. Now, earlier you were talking about the Henry Review, dusting that off. Is there any one or two measures in particular out of the Henry Review you'd be inclined to look at?
yeah. Look, I think definitely resources taxation,
Yeah,
and he also the review also had a whole bunch of sensible stuff around concessions, right? So
yeah,
we've obviously got these massive leakages in the superannuation concessions, property tax concessions. There's a whole bunch of stuff. The way we overtax some areas. So, for example, if you've got bank account savings, you get taxed at your marginal rate.
you
But if
get
you have
hammered.
other
Yeah.
form of, speculative savings, or effectively, we
If it's in a self-managed super fund in which you can negative gear, you're probably owed something.
yeah, that's right, that's right. So look, the Henry Tax Review had a lot of sensible stuff, and I think the federal government should really just dust it off, update it. Probably needs to be updated, and
Yeah,
just go to town with it. And but really, we do need, given Australia's situation and those charts I showed before, not just iron ore, coal, and gas, where we're number one or number two exporter and all those things, but also these other areas, like all the stuff that goes into batteries, Australia is
yeah,
swimming in. We really should be creaming it and making enormous amounts of tax revenue off that, just like Norway does, like Qatar does, what sensible
yeah.
countries do. And if we did that, we wouldn't have these budget deficits. Um,
I must admit, as I was looking at those charts, I couldn't help but think, right at the moment, the rare earths is a very, very major strategic issue in which I would have thought there'd be some scope for Prime Minister Albanese to have a chat with President Trump and say, okay, we've got all this stuff. If you guys reckon you're going to be short, how about we set up the capacity to generate the need in Australia, and away we go. And at the same point, I know for a fact the CSIRO was involved in conceptualizing and designing the very first solar panels, given that it already, because of the solar panel uptake that Australia's had, we're about 10 years away from having very large numbers of solar panels needing replacement and presumably the refurbishing of old ones. Australia probably needs to think about what it's going to do at that point and where it's going to get those solar panels from. And if there's a demand for them, maybe we should think, okay, we need to make the energy cheaper here so we can get the glass happening here, but also using the rare earths or whatever it is that's needed from Australia to actually generate a skilled basis for us to actually grow our own population.
Yeah,
Yeah,
so I wouldn't want to see Australia suddenly start to make solar panels just because I think we're never going to do it productively. But
yeah,
if we had, I think the first principles, give ourselves very cheap energy, and then
yeah,
we see what happens from there.
yeah.
Because you probably would see companies go, geez, Australia's got really cheap energy. You know what? It's got all this other stuff here as well.
We can
Let,
do something with that.
let's open up a battery plant if you want to do that.
Yeah,
So, but it comes down to having cheap energy and then having, the right policies around the other stuff
yeah.
to basically facilitate these industries to develop. Rather than Albo doing his future made in Australia and throwing heaps of taxpayer money, he's trying to pick winners, that sort of thing. I don't think that'd work too well. But
Yeah.
that basically Australia does need to upskill, because at the moment our whole economic model is importing people, so that you increase demand. You have to build houses for them. You sell coffees to them. You sell consumer goods to them. You get top
And then
line
you send them
GDP
out
growth.
into the community and make them the world's most expensive beard trimmers.
Yeah, it's just not a very very clever economy, and again, it dilutes our mineral wealth.
Yeah,
again, we don't tax it properly. We do get some company tax from it. States do get some royalties, but not nearly enough. But then we dilute what we do get amongst one of the most aggressive population growth programs in the world. I mean, Australia's population has grown by 46% so far this century, so in less than 25 years. That is the highest growth in the advanced world, bar none. So, you got to ask yourself, is this making us better off? We've got, overly congested cities, unaffordable housing, infrastructure that never keeps pace, declining productivity growth, just top to bottom. We've got, budget deficits left, right, and centre, states drowning in debt. You got to ask yourself, is this big Australia policy really working? I don't think it is.
Yeah. And on that gloomy note, Leith Van Onselen, I thank you very much for your time. I'll look forward to catching up with you next time.
Cheers.